Hello and welcome to the Netpicks.com Top 10 Tips for Trading Success. Thanks for joining me today. This is Mark Soberman, and what I wanted to share with you were 10 of the top tips that we have learned over the years of trading. Netpicks has been around since 1996, so been at this for a long time, working with individual traders and investors just like yourself. We've actually worked with over 100,000 traders in the 15 years, have a great coaching team made up of real traders who are in the markets every single day. Probably at this point have called tens of thousands of live signal trades, 1,000 plus live training sessions, and you name it, futures, forex, stocks, options. And one thing we really like to do is just give you a very honest assessment of the realities of trading. What I wanted to do here was kind of take you through really the top 10 tips, and I think that these will ultimately save you money in your trading, and as well as I really believe can actually make you money in your trading if you're willing to kind of absorb a little bit of what we have to say here. So number one, a lot of us love to day trade, but I've got to say day trading is definitely not getting any easier. You're right, we don't want to be this kid here, we don't want to be the loser, but it is something where the majority of the people that we talk to are not on the positive side of the ledger. You know, the charts these days are getting much more erratic. There's a lot of spiking, there's stop running, there's choppiness, false starts, there's whipsaw. That's pretty tough when you're having to trade through all of that. So what are some of the solutions? We need to look at some solutions. Well, number one is to consider integrating swing trading into what you do. It doesn't mean walk away from day trading, but it absolutely means you should consider swing trading in your trading plan. And also, even if you day trade, longer time frames might just be slowing it down on an intraday basis. Number two, focus on win percentages in the 60 to 75% area. Too often people feel they need to win 80, 90% of the time. It's very difficult to be successful, if not impossible, at that win-loss ratio on a regular basis. In addition, you don't want to be much below this because psychologically it can be quite challenging. And solution number three really is to look at alternate time intervals besides 5-minute, 1-minute, 2-minute charts, and we'll talk more about that in a later slide here, and that's tick bars, range bars, Renko bars, which for some of you may be something you've never even heard of. Okay, so number two is where are the hot market opportunities. Now there's many markets that you can trade. Obviously some of you are coming into this as forex traders. For us, we really feel the best day trading forex markets are the Euro US, the Pound US, and the US Yen. Absolutely, you can trade 15 other forex markets if you wanted to on a day trade basis, but I'm going to say for the most part it's a waste of time and effort. Swing trading, you can see we've listed off some additional currency pairs that are also quite viable on a swing trading basis, and some alternates listed as well. For the most part, this is where you should place any and all attention, and really if you're going to be day trading, you're really only going to want to focus on one or two. If you're going to swing trade, you can usually get away with maybe 3 to 5 at the most, but there's a lot of correlation in forex pairs, and I'm going to talk about that in a moment as well. Now, how about forex futures? A lot of you ignore this, but there's a regulated market. It's centralized. It has one product feed, basically, meaning one set of trade executions, lower commissions, and that's the futures on forex, or forex on futures. Okay, the Euro future, EC, the British pound, BP, and others. Great opportunity. You need to look into it. As far as straight futures trading, Russell E-mini, Nasdaq E-mini, crude, silver, gold, and DAX futures seems to be where the best opportunities are. I know some of you think S&P mini, that's a tough market to trade. All the big professionals are in there, and it's a tough market to successfully trade. Stock and options, there's a million ways we can go, of course. The tech favorites such as Apple Computer, Google, etc. will always probably be perennial favorites. But take a look at ETFs, but be careful if you're looking at leveraged ETFs, because they're really only good for short-term trading. There's some real interesting things the way that leveraged ETFs work that sometimes can be more troubling for longer-term buy and hold. But we always like to push people to what we call the hidden gems, and futures like soybeans, wheat, and natural gas, many times where everybody else is not, tends to have some of the better opportunities. And keep that in mind as you kind of go through your trading. Now, we talked a moment ago about correlation. What correlation means is when one market moves a direction, it may have another market that moves exactly the same direction, or a total inverse like the Euro US to the US franc. The problem is if you start buying a lot of these markets, like if you bought Euro US, sold US franc, bought pound US, more than likely you could see all three of those pairs ending up with the same result. This puts people into a lot of trouble because they tend to over leverage. They tend to way over abuse the leverage that Forex brokers give, and then they stack the deck with a whole bunch of different currency trades, and unfortunately many of them are going to move in the exact same direction. Do a Google search on Forex correlation and find out which pairs are correlated, and they do change over time, but absolutely look for that and be very careful when you're trading multiple currency pairs. It can be a big mistake. Now, one thing I always tell people to do is the trading freeze dance, and what do I mean by that? Is before you take a trade, don't jump into it because you just have to be there. We all get greedy, we get panicky, we let the emotions take over. Ask yourself, is this the time of day you should trade? Is this the exact target, stop and trail stop rules that you want to follow? Have you looked at key levels, prior swing highs and lows, news events? You got to ask yourself all of this, position sizing, before you take the trade. Now, this should take literally seconds, but the problem I see is people panicking all the time. They just desperately don't want to miss the next trade, which might be a winner, and almost always what happens is you end up losing. So freeze for a moment and make sure before you put that trade on that it truly fits your trading rules. Number 5, do not buy another system without what we call as WYSIWYT. What you see is what you trade. Stop falling for all the charts like you see on the left where some guy or gal tells you where they got in and got out, and it always looks incredibly perfect, and we all kind of get desperate for those results, and what you end up with, of course, as you know, are very poor results because 95% plus of the traders who start in this game do not make any money. Instead, your chart should look like something on the right, where it's very clear where the entries are, what the indicators are telling you to do, where the targets and stops are. If you will do that, you will save yourself so much money on courses and training and books and software, and you'll also actually have a chance to position yourself to make some money in trading. Number 6 is key levels. People hate to have to deal with this because this kind of brings in a little bit of the subjectivity and what I call the art of trading. If you avoid these, you do it at your peril. Okay, so there you go. What happens if you avoid key levels? Yes, it means that it's not 100% mechanical. I know that's sad. Yes, it means that you have to add some adjustments in subjectivity, but realize there's no 100% mechanical robotic system that's going to work for you, and your computer is not going to be the cash machine no matter what you read in advertising. So key levels is a long topic on its own, but it's basically there's certain structured areas where markets tend to run into support and resistance, and by you adjusting up and over and around and through, you'll make a big difference on your overall performance. Number 7, explore new time frames. Don't be so fixated on 1-minute charts, 5-minute charts, 15-minute charts. It's not all time intervals. There's some great opportunities. In fact, in day trading, you're going to do better if you consider tick charts, volume charts, range bars, even Renko. Sometimes it gets a little bit more advanced, but the opportunity to be more profitable is very prevalent, especially for day traders. Remember, one of the golden rules, though, no matter what you try, always backtest everything. Don't take live trades with real money until you have hundreds of practice trades and you've done at least 25 real trades in demo mode on your own following the rules. Not 25 winners in a row, but successfully following your rules. Now, there's a lot of reason why people buy trading systems and they fail. Some of the biggest is they never get started. Don't fall victim to that. Number 2, they don't follow the rules. I can't tell you how many people get taught a great system and blow it because they just can't seem to follow the structure and the rules. Number 3 is they get way unrealistic when it comes to losing trades. People hate to lose. Well, you're going to lose. You're going to lose on a regular basis when it comes to trading. The idea is to put the odds in your favor as much as possible. And pledge to yourself no more BS, get-rich-quick systems, which takes me to number 9. Pretty simple. If you're buying Forex robots, EAs, robots, etc., they're not going to work. Crash and burn. Throw them away. Don't do it. Number 10, how are you going to succeed this year? Well, we're dedicated here at Netpicks to providing you with systems and live training, software, coaching, trading plans, lots of free education. So if you're on our list, you're going to get lots of freebies, lots of good stuff, software, etc. Lots of training from basic to advanced, and always constantly following as markets change. We've been doing this since 1996. A lot has changed over the years and will continue to change going forward. You can count on the fact that Netpicks is going to be on top of it because every single day, our team, we're live, we're in the market, we're taking trades. So by all means, come to our blogs, come to our site, get yourself into our list. We'll get you a lot of free information. If you're interested in the future in one of our courses and training, that's great. But regardless, I think we can share an awful lot with you with our 15 plus years of experience. So again, thanks for listening. I know we went quick. Replay this again, watch it again, and we'll be back with you soon.